This is Ron Kuzeman, Spoonman for Risk. It is October the 10th, 2014. This video, which is live at the moment, is going to demonstrate how premium gives you a much better advance on market direction than any other standard indicator. As the market was rallying up to this high, the premium, we reset our premium indicator to look for new lows. We set that at about 11 o'clock. So from there on, we're looking for new lows. We have a lower threshold at negative 762. And we have this low on the premium here, right here, as you can see. This is a naked bar. We have another indicator that's based upon price alone. It's a slow moving indicator that gives us evidence of a trend change. Now that indicator was long right here as is shown, but finally went short here. Then went long again here and short again there. But what does the premium itself say? Premium says we're short. And it says we're short because this is a naked bar. And we're coming right back down to 1975 or less. I would anticipate less. And considerably less, as we anticipate at this point in time that new lows for the day will occur in the last half hour. So our indicator, all right, the primary indicator that we use, which is a cash-based indicator, has been volatile through the course of this move. But the premium is saying we're short. Now, this would have been a real nice place to short the market, right up in here. You move right up into the calculated upper threshold level of the profile. And with the threshold set at negative 519, you barely make it up there. New highs here, premium says we're going up. Move right up into the into the threshold, lower highs on the premium, you're divergent, you're at or below the threshold level, and down we come. So it's just a matter of time before we see this drop even further. Fair value is set at negative 680. So as this begins to drop, which we expect because of that bar, all right, we should begin to see even more new lows on the premium take place. If we don't see new lows, then that could indicate the possibility of a rally. We'll just have to wait to see when that occurs. Now, one other thing regarding our primary indicator here. This indicator, as we say, is cash-based. It's not based upon what you see on the screen here. This indicator is sitting on a different chart. The data is sitting on a different chart. And we're just showing you where that particular data says we're long or we're short. How we normally use this indicator when the premium is not giving us a heads up. In the case of this long, we would look for the contrarian. We would look for a setup that says we need to go long. Here would have been a nice place to do that. However, the lower the premium here indicates that we're returning to that price. So we would have not taken a long trade in here because of that very high probability of the Spoos moving back to that price. If they had done so, then we would have taken a long trade, presuming that a return to this price in association with a higher low on the premium would have given us the divergence that we're looking for to go long. But that doesn't occur here. This is a naked bar. So instead, it's forecasting a return to that price. And there's been no new low on the premium since then that is lower than that associated with the bar here. So we're short. Despite anything else that's shown here on these indicators, we're short. We'd definitely not be going long in here. We'd be looking for a short. In spite of what the indicator says, we're short because of that bar. So if you hadn't taken a short trade right up here, where else might you take it? You have a contrarian right in here. This is hitting 100. Anytime this is hitting 100 or this is hitting 100 is a good time to take a short. So right in here, once again there, right in here, there, and even what we just saw occur right in here. Now, of particular interest is what is going on with the Dow. When the Dow is divergent, it's particularly good to take a short trade. Now, what do we mean by that? We're going to look at these three indicators, here, and here, and here. When we're getting new highs on the Dow, but lower highs on these three indicators, the Dow is divergent. So, right in here, the high of the Dow there, 734, didn't quite make it here. So that's really not a fair comparison because the Dow itself is not hitting a new high. So let's look at it here. This is around 33.47, 34. So this is a higher high. Okay. So we compare this to this, and look at where we are on your indicators. Look at this high here compared to this high here. There's a divergence. Over here, 34, 84. Right, didn't quite go as high. 34.84, 34.93. All right. Now, look closely at what we're about to say. This is definitely a new high, and it's divergent. So there's your short. But it comes back up. You're hitting a higher high on the Spoos, just slightly. Higher high here, lower high here. This is not as high as it was here. The Dow itself is divergent. So in spite of where the indicators are, the Dow has not hit a new high when the Spoos hit a higher high. The Dow is divergent itself. Boom. That divergence results in a nice drop. Okay, follow what we're saying? So if you look at these three primary indicators that we're talking about here, this high, all right, is an overbought condition, but it is not divergent. The indicator isn't divergent. In fact, it's slightly, just slightly higher. But the price of the Dow is divergent. So those are two forms of divergence that we watch, and can very successfully predict moves on the Spoos. But you got to have the right indicators. Now we're in a short where we're expecting this drop to come back to 1918. As the Spoos dropped into the upper threshold level here, it's finding a little bit of support. A little buying going on. Because those traders who follow the market profile indicator here recognize this to be a support area. And so they're likely to be buying at this price. Similarly, when you see it on the Dow, you're seeing buying going on. And look at your indicators, these three indicators here, as we hit these lows, are showing some divergence. Higher lows, lower lows here. So that little divergence is what many times traders will look for to determine when to take a long trade. But the premium, on the other hand, says a different story. It says this is not your support area. That support area is back at 1918, not 1923. It's 5 points below where you're at. So all of these fellas here that are buying into this move, you know, because of the threshold level, are going to get stopped out. And all you had to do is know what the premium was doing. And you watch this happen. This is going to be very cool. All these buyers in here are about to get themselves stopped out. Oh yes, more buyers. They love this. They say, oh yeah, this is good. We dropped just a tick lower, think 22.50, 22.25. Okay. Oh, we got in on this. Yes, look at the divergence on the down. We're going to rally back up. We love it. Yes, 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 yes. We were right. We bought in. And the market moved up. This is going to be a short-lived glory. Because this market's coming down. It's not going up. So those fellas that bought in here, our traders, because of looking at premium, knew that this area right in here, just as the premium barely makes it up to the upper threshold in association with this high of 24.75, see this as a contrarian here and here and here. There's your contrarian. And they shorted that. And the buyers are still thinking this thing is going up. Well, it may go up a little. But the trend is down. It's not up. Now, as we got into this high, there wasn't really any divergence on the down. It's nice when that happens. It doesn't always occur. Maybe barely a little divergence right in here. That little move up was barely divergent right there. Now, just as a comparison, Spoos dropped to 22. Look at where the premium was at that time. It's right here. I'm going to put a drawing tool in here just so you can see what I'm referring to. That bar right there. Let's make that a little smaller. Okay. So that bar corresponds to this bar on the premium. This bar corresponds to that bar on the Spoos. This was at 22.25 here, 22 here. This is higher than that, but this is lower than this. This bar is lower than that bar. What does that tell you? This is not a divergent bar. It's low. The premium is lower. It's saying we're going lower. We're not going up, we're going down. Okay? So all these people that were buying in here, you know, say, oh, we should be going up, we should be going up. No, friends, we're going down. Similarly, look at the high here. This is a nice little exercise that we see going on here. 24.75, 24.50. Look at the high of the premium here, highs of the premium here, lower highs on the premium You didn't even make it to new highs here, but you had lower lows on the premium here. And as we said, we're in a short, we're not going long, and these guys are getting stopped out. So as not to bore you too much, we'll wait for this to drop even more, as we expect that it will. And again, the reason we're saying this is right here. 1875. You don't want to even think about going long until we get back to that price. So all of this, in spite of anything else that you see going on, the premium doesn't lie. We're short. Now, there's only one caveat to this. If the premium were to drop lower than it is right here, before we get to this price of 1875, we would have to reassess our expectations. But until that occurs, 1875, that's what this is predicting. So you shorted it up here. Every time this thing got into a contrarian, you were short. We'll come back in a minute. Incidentally, shorting two contracts right up here down to your expected level as shown on the premium here, which is 1875, that's the low, would make you $1,000. Actually, a little more. But you watch, that's what's going to happen here. If you weren't in a short, you just had another contrarian. All right, we hit 100 here. We've been at 100 over here. Over all of these indicators, except for this one down here, is showing an overbought condition. And we're talking about a short right in here. We're just trying to give you an explanation as to why. And if we look at our indicators here, looking at this high compared to this high, there's not really any divergence here to here, but there is from here to here. Okay, this particular indicator is showing a divergence. We've got one divergent indicator here, so we might get another move up here, but this is what you're looking for. This is good to short this, although we love it when we've got more divergence on the Dow. I should mention, look at this wave here, lower high here. So there's another area of divergence. And just in case you're not following what we mean by divergence, let's just use this trend line. Okay, this is higher high on the Dow, lower high on the indicator is what we mean by divergence. Divergence along with the contrarian. Now, incidentally, This is where we shorted it. Right at 29.25. And we're coming right down to that 18.75 predicted low by the premium. Now, we expect it will go lower, but you can often use the premium, and we're just about there, where you can often use the premium to give you the target for where you want to exit the trade. And as we said, 18.75 would make you 1,050. All right? On that trade. That ain't a bad day's work on 2 contracts. All right, we'll come back. Now, incidentally, look at this wave on the premium. See how this premium indicator has been slowly sloping up and coming to the crest of the move. Now it's going to turn, and that's going to take us right down to 18.75 without any problem, and you just made over $1,000 on that trade. Okay. Not bad. That's how the premium can be used. Pretty cool, isn't it? It's very cool. Very, very cool. All right. You just saw the premium in action, and you saw how useful the premium can be. Now, like we said, we expect this to go lower, but all through this move up, you were looking to short this thing. Okay? You were looking to short it, not to go long. Now, we could be wrong on the overall call for the day. We're expecting the lows in the last half hour. And the fact that we failed to move into a new high before noon, it was a pretty good indicator that there were 2 possible patterns that were developing. 2 possible patterns. And we've got to show you this on the on another chart. All right, here's your high in the first half hour. Now, that frequently predicts a new low in the last half hour. The low of the morning is at 9:32. Now, if that's the low of the day, then the high of the day should be somewhere around 2 o'clock. And as you know, we always speak in terms of Central Time. Failing to make a new high here before noon, it was close, but we failed. And you knew that you were going to, this was going to, well, you don't know that that's going to fail, but you know that it's going to retrace based on that big bar on the premium. Now, it wasn't a new low for the day, I mind you that. But the overall trend of the premium has been negative. We haven't been getting new highs on the premium. From this point here, and that bar on the premium was satisfied with the drop, we were continuing to look for new highs. We didn't see it. That was the last move up on the premium. It was a lower high. It didn't get into a new high. So that failed. And this bar here, associated with that bar on the premium, although granted not a new low, but well below the lower threshold, gave you the expectation that this market was going to drop, failing to hit a new high for the day. Normally, we would expect to see a new high by this time, but that failed, and therefore the forecast now changes back to the new low for the day in the last half hour. We could be wrong. Yes, we can always be wrong. We're going to have to drop below 950, this low here. We've got to breach that if we're going to breach this, of course. So we'll have to wait and see. Now, there was one other thing that we just want to mention, and I have not checked this, but it looks like it was probably accurate. See this blue bar on the ticky? Okay, that's a 28 on the ticky. So when this low, right after that low took place, we got a new high on the ticky, a 28, which means the market's going higher. So while you had a divergence on the premium, in fact, at that low, the low of the premium just came to the low threshold area. You had a big bar on the very next, in the next minute, of a 28 on the ticky, which means this thing should be rallying. And that's exactly what it did. But you had a heads up that this was coming back. So the premium gave you the ticky hits a 28, and I believe that to be correct without going through a few things to check it. It does look like that was a true 28, rallying this up to the high here, but not enough to keep it going. So our expectation is still to see the market drop. Now, on the premium, we're going to need to sit, well, let's just look at this. It's hard to say. We could just as easily drop to a new low in the last half hour without having a new low on the premium for the day. But typically, we'll get new lows on the premium in the afternoon, and probably somewhere after 1:30. So another hour before we start hitting new lows again. But we would expect that the market would need to drop below. Let's just look at this here. This low is right at about 19. Well, the low is at 1908.75. This low, 1911. So somewhere below 1911. We should expect to see some new lows on the premium, I would think. Might happen before then, might not happen at all. But short we are. And that was so cool. So cool. we're going to give this some time and come back when something more significant takes place. But this was a nice demonstration of the utility of the premium. Beautiful opportunity to make some real nice money off of this short. Let's just take a moment and talk a little bit about what has happened over the last half hour. The anticipated drop to 1875, which takes place right here, brings us right into the point of control. As we said, we expect this to continue to drop, the overall pattern being short. Nevertheless, as you came down to that price, and you look at our indicators here, this is clearly an oversold condition. All right, this is oversold, but it's not divergent, and you don't get a real divergence until we drop lower. Okay, so at this point in time, as we're dropping into 1515, look at this compared to this. That's the divergent, and we have an indicator over here that's calling this divergence. This little magenta colored line is a divergent indicator. So you could see that we're at a lower low here, higher low on our primary divergence indicator. And then that reverses up here. New highs here, we move back to this upper value area, and we become divergent again, right there. And so this yellow trend line is an automatic line that's drawn when we have divergence. So you had a divergent short here, retests right here, and we've even dropped lower on the indicator at that same price. So down we come, right back to the point of control. The divergence that you saw on this chart is confirmed on this faster chart below. Okay, we look at this point here, the trend line does not continue here because this turns out to be just a little bit too low, and I think the price here I'm just trying to verify. Okay. All right. So we have our divergent indicator showing up here as well. And that corresponds to this other high that is tagged. So here's your primary divergent indicator. You're overbought, but you're divergent, hence the line, and hence the drop. And then we get into another divergent long right in here, right in there, we go divergent long based upon the lower low here compared to the higher low on the indicator. So we're just going to watch this for a few minutes, and we'll show you just how quickly the divergent indicator will show up when we have that kind of condition. It may not occur. We may not get to that point because it just moved right up into this upper value area, and when you're below moving up into it, that's usually going to be where you'll find resistance. In order for the divergence indicator to fire off a divergent trend line, we have to first become overbought. which is what we did on this first move up. As you see, this turned white when that happened. That's got to occur first before we can see the divergent trend line appear. Now it may occur here on this chart. But it looks like that move is completely over. So we're looking to take short trades here, not long trades, because the overall trend is down. So that didn't occur. We're just looking for the opportunity to show you how the line appears on the chart. And we didn't get a chance to capture that live just yet. So the conditions for it to occur, we need to get into a high associated with an overbought condition. Then we have to hit an equal high or higher high where this indicator here is at a lower high. That would fire off a yellow trend line. It just didn't occur. So if we see this developing, even for a long trade, we'll show you that. See, we were overbought here, oversold right in here. So if we return to this price, which is down there around 20, anyway, the low of that move. Okay, so it's just at about 20, a little less. If we come back to 1975, and we fully expect to, by the way, and we have a higher high on the indicator, we'll then wind up getting a divergent bar as we would here. It'll turn to blue. Okay, now we're coming back up to this price, so maybe we will get that chance to see a divergent bar show up. Let's just stick with it. Okay, now we're really at a higher high. So that is not divergent. The reading of if you look at this compared to this is clearly higher than this. So this move can't be divergent. It can be overbought, but it can't be divergent yet. We have to hit a higher high with a lower high associated with this indicator. Okay, we may be able to get a divergence in here. You'll see this show up. The indicator logged the price associated with this low when this indicator became oversold. Now, the blue line will not show up unless this bar, pardon me, this indicator here is showing an oversold condition. And although this was divergent, okay, in the sense that we had an equal low here and a higher low here, it didn't meet the criteria for displaying a divergent because it needs to drop below a threshold of -80 when it happens, and now it just did. Okay, now this showed a divergence because of recording this low compared to this other low. I'm going to have to expand this a little higher. All right, so it actually did show this divergence. All right, so it first recorded this, and then it recorded this particular price in association with this reading here. And when this price was hit, we were at a higher low here. And that's why the bar showed up. So it wasn't comparing this to this. It was comparing, again, this is A, this is B, this is C. This bar did not show up because A was being compared to B, but rather B was being compared to C. Now let's see if we can do this again. We've now met the criteria for divergence by this having reached a threshold of -80. It has to hit that first. Pardon me, positive 80. So it's now recorded the high at 23. And the only way we'll get a divergent bar there is if we go back up to that price and this indicator here is at a lower high. And we're just getting a lot of volatility in here. And all we're trying to do right at the moment is just to demonstrate how quickly the indicator appears on the screen, so that if you're trading this, there isn't a lag. However, I wouldn't be long. We would want to be short based on pattern that long. But there are some traders that might want to scalp something like this, but I wouldn't be long unless we were way down here toward the point of control. If we were divergent at that point, yes, maybe then. But that doesn't seem to be the case here. At least not yet. All right, we'll come back if we have a development. Okay, we may get a divergent bar in here. it'll have to go lower than it just went. All right, we have the making for a divergence. See how this showed up right here. So that bar showed up the moment that we hit a lower low and we had a higher low on this indicator. This bar showed up because that low was divergent. So you saw how fast that occurred. So if you were looking, well, in this particular case, yeah, you've got an opportunity for a rally up because of that divergence. You have plenty of time to go ahead and go into a long trade if that was the direction that you were hoping to trade in. So the bar doesn't always appear right on it. It's the way the indicator is designed. Sometimes the trend line will be horizontal, as it is here. Sometimes it's a vertical line, as it was here. Not saying that it was divergent at this on this bar. This didn't show up until that bar took place, so it signaled you about that divergence. For example, here we have a diagonal line because this high is associated with a lower high on the indicator. This is being compared to this, and these highs are being compared to that high. This low, okay, that low right here, okay, is where we register the first low associated with the drop below the threshold area. And then we don't let's see here. Yeah, we don't have a pivot until right in here, and that's where the divergence bar ends. Let's see if we can find another one, because this may be a little bit confusing. It's a little bit confusing to me, just exactly how this is forming. Oftentimes it's a bit more clear, but let's just give it a moment. Let's see if we drop. If we drop back to this price or lower, we may get the opportunity to display this again. Yeah, this just isn't real clear. I appreciate that. We're just trying to demonstrate it for you, that's all. So we'll come back. Okay, now let's watch. The indicator is recording the price, 1775. And now it's recorded the next new low. Now, for the divergent bar to appear, we've got to drop back to that low, which, as you can see, we didn't quite make it. But instead, again, this vertical bar appeared. This appeared as soon as we dropped into the threshold area. Yeah. That's when the vertical bar appeared. So it was looking for where we became divergent, pardon me, where we first started to record the lows. We're just not getting a real good display of this. All right. Now we just had a divergent high. Sorry, I wasn't displaying this at that exact moment. So this bar appeared. Interesting. Okay. So we looked at this high, compared it to that high, and this reading here at 69.32 to 55.05 here. And it gave us a divergence. So normally, we expect this to move up to the threshold area, but I can see that didn't happen right here. That definitely didn't happen. But in any case, it signals you, and that's the important thing. It's signaling you that we have the conditions for divergence here, and it happens very quickly. So maybe we can catch this again, because I fully expect this to be dropping even further. But we've got enough volatility here where the indicator can fire off. We just want to catch it when it actually happens. Okay, we might be able to see this happen again here. This high was recorded. We have to move back to that price in order for it to be divergent. But we're getting so much volatility that it's very difficult for that to occur. Now we've set this up for the Dow as well. So it might be that we'll see it happen on the Dow before it happens on the Spoos. All right, we have good conditions from which to demonstrate a low divergence. Or in this case now a high divergence. I'm going to look at both charts here. Keep your eye out right in here. Okay, there's your divergence. 1975, 1975. So it showed you that divergence now, that bar yeah, okay, now it's coming back. So it showed you the divergence. You get ready to take that short trade right in there based upon this divergence. That was a good demonstration of how this works. So hopefully now you know that this isn't drawn in any historical sense. It happens the moment the condition takes place, the divergence shows up. Okay, and you've got to be ready to pull the trigger. Okay, all right. So that finally demonstrated what we've been trying to show you all for the past 20 minutes or so. Okay, all right. So we're going to conclude our video at this point, and our anticipation here, and it is currently 1:32 Central Time. In the next hour, we should be seeing new lows. That would be the expectation based upon the pattern. The low, as we know this today, was way down at 12.25, with the overnight low being at 11.25, and we expect that's going to be revisited. So getting in on a short trade, to hold it to that new low could be very profitable. pardon me, I misspoke. That low was at 1906. That's the low that we were expecting. So here we are at 18. That's a 10-point drop from where we are right now. Now, as I speak, there is one other caveat to all of this. It just occurs to me that there might be one other pattern. Okay. Yeah, there might be one other pattern here that we that could be emerging. All right. The pattern that we're expecting is going to would result in a new low for the day in the last half hour. That's one possible pattern. Now, another pattern that was possible but is no longer is a new high for the day somewhere around 2 o'clock. That's no longer an accurate pattern. So there's really only but there is still two potential patterns here. One is a new low in the last half hour, which is what we're expecting. But the other pattern is that it doesn't go any lower, but it neither goes any higher. In other words, it doesn't go way back to 1930, but neither does it drop to 1906. You want to be short here. And the closer we get down to the initial balance, the more likely that we'll be hitting, of course, a new low for the afternoon. But there is a possibility of this being what we refer to as a blue day, wherein we don't go any lower in the afternoon. The high and the low happens in the first half of the day, and in the second half of the day, in the afternoon, we don't hit any new highs, nor do we hit any new lows. That is a possibility. Okay, we broke the low from this point right here. 1575 is the low. We're now going lower. That gives us further confidence of a new low yet to come. Now let's go back to our primary screen. It appears as if we're going to wind up having more volatility here. Nice drop. Nice drop. Premiums, the Spoos have got to drop, I think, closer to 11 before we ought to see some new lows on the premium take place. But as stated previously, that may not occur. But as we move down into this low value area here, all right, the reason we're thinking we may get some volatility. Now, we talked about divergence on the Dow. Okay, look at this indicator here. Compare it to where it is here. This is divergent. This is not. that divergence that you're seeing on the Dow here, when you look at the Spoos, they're coming right down into that low value area where you might normally expect to see some support for buying. And that may occur, but keep in mind this is short. So if you were in a short trade, you may want, no. Well, I was about to say you may want to take some money off of the table. But all that having been said, your lows here are yet to come. The low for the day ought to be right back at 650. And this is looking like the premium is getting ready to drop again. Carefully watching the Dow too. And there's now more clear evidence of divergence on the Dow, which would generally tend to raise the price of the Spoos. Yep, and there she goes. Now, the Dow comes right back up to the low value area here. All right, see how our indicators are now overbought. But divergent. Higher high, lower high on this fastest of the indicators. These are progressively, this is the fast indicator, this is sort of a medium speed indicator, and a slower indicator here. And the fast one is showing the divergence more quickly. This got overbought, as did this. We did not get overbought on this indicator. This has to be over 80 to be overbought. And on the premium here, I had a divergence on the premium right there. Let me blow this up so you can see it more clearly. As the price moved up to 1575, the premium didn't make it to the upper threshold at that particular time. So oftentimes we like to see it get a little bit higher and then divergent. We're up to 16 now, and even at a lower level on the premium. So this is really quite divergent in here. This should be coming down, yeah. Okay, now on the Dow, it's more, you've got a clear picture of the divergence at this point with the Dow. We came right up here to this threshold, 647 and change. We're now a little bit higher here. And see where our indicator is here compared to here. Divergent. Very clearly divergent. Very clearly divergent here. And you see what's happening? Now the drop. So if you've been listening to this video throughout the course of this video, when we see the divergence on the Dow, it really further confirms the trade on the Spoos. And even if that was just a scalp, look at the drop. 1575, 14 1/4. Let's measure the wave. This, yeah, look at your indicator right here. We're looking at the premium indicator here. All right. Look at the amplitude of this wave here compared to here. Wow. You could see that short coming just on the basis of this indicator right in here. Very clear that this was going to drop. Now from this little move up, and I'd have to go back just to be sure of the number of waves we've had, but I think we can confidently say that this was wave 1 up, wave 2, wave 3 never makes it. If that count is correct, then this is wave 1 down, and so the low associated with the first wave down barely makes it to the line here, to 1350. And if my count is correct, and I may not be, because we shouldn't go above 16. If this is wave 1 down, then this shouldn't go above 16. But the next wave down on the premium, if my count is correct, ought to break through this lower threshold. All right, but in any case, let's just, okay, we hit 16. Higher high on the Dow here. This could be going higher. Yeah. Yeah, look at this. Yeah, 16 1/4, 16 1/2. Watch your indicators. Okay, that wasn't wave down. The count was wrong here. It's wave 1, wave 2, wave 3. This is wave 4 up. So that could be all she wrote. Now, let's look closely at the Dow. All right. You've got a little divergence right in there. Overbought here. This could have been shorted. Just like you were short here at 16, it barely makes it above 16 or 16 and a half. Short it again, add to the position. Yeah. Not much divergence on the Dow, but overbought in any event. So you're still short. Right in there, you're short. We'll come back. Incidentally, all right, look at the composite profile showing the low value area at 1912 and a half. And go back here. Let's get a picture of this. All right. We didn't drop that low yet, but you can expect that would be tested. Okay, we're back at 1650. All right, let's measure this. Compared to this. Okay, here's your high on the Dow, 53. Doesn't quite make it. Okay, you're divergent on the Dow. Look at what we're talking. See what we're talking about here? 53.64. Okay, that corresponds with this high here. The Spoos were at 1650 at that high. They come back and hit 1650 again here. The Dow, on the other hand, fails. The Dow itself fails to tag that high. It itself is divergent. Forget the indicators. The Dow itself is divergent. It doesn't hit an equal high, and you can often short that kind of a move. Now, as far as the indicators are concerned, however, measuring the high here compared to here is divergent. But keep in mind, when the Dow itself has failed to reach a new high, you don't expect this to hit a higher high. Sometimes it will. It's a rarity, but sometimes it will, which gives you a further confirmation of an overbought condition. back at it again. We're not getting much. It's not dropping, and you don't see anything on the premium either that's forecasting this drop, the drop that we expect to occur. But there's nothing on the premium giving us a real basis of where this market should be going based upon the premium. All right, all of these drops in the premium here, forecasting a drop on the spoos, have already served their purpose, and so there's nothing new happening. So all you've got to work with here is the overall pattern. We went as low here as 13.25. And keeping in mind the threshold level at 1912. Yeah. One more hour to go. This should really begin to tank if the pattern is going to prove consistent. All right. Take a look at this. There's the calculated lower value area. But right below that, you've got an area of lower volume at 11.5, 11.75, and then an even lower volume area right in here. Okay. Spoos went down to 6.5. Okay, that's associated with this higher area in here. And if you watch our videos, we spend a lot of time talking about how to read these profiles. And the overall viewpoint that we have is that as the market is, and we'll just talk about a short here, as the market is moving down, it fills in the area of lower volume and then moves up to the area of higher volume before it usually stops. And for example, it would stop like right in here, right before it drops again. And if it gets through that area, it moves up to the next area before the next drop occurs. This is where the low of the day occurred. Based upon pattern, if that low is hit again, it should be exceeded, which then means it's starting to drop again. And you could see, although it might be really hard to anticipate for today, but you could see this big drop, you know, from right in here all the way down to here, dropping the spoos below 1900. And of course that's entirely possible. But we've only got an hour to trade yet. I don't think that's going to happen today. But we're not getting the drop that I would have expected us to see at this particular time. Hasn't yet occurred. We're back at 1913. So we're back. Yeah. See how the market had rallied up to 1916, okay, and a half. That's as far as it went. It's coming down here to 1275. Okay, so we're getting very, very close. We've now just hit the 1250 area. We're looking, now we're at 1175. We'll fill in this area. Now here's where we're going to see a bit of a fight. We're coming right down to the extrapolated low of the Dow. Now the low of the day was 611. But this area of support is often hit, and we begin to see the market rally back up again. So depending on whether that holds, we might see this move back up. We've got a little bit of divergence developing in here. But it's right around this price that we would also expect to see a big drop in the premium. So we're getting very close to that price. And as we said before, it may not occur. But if it is going to occur, this is the price at which we would expect it to occur. Between 12 and 11, a big drop. Let me show you why I'm saying that. We'll just use this chart to illustrate. This big drop occurred, oops, let's get to the right time. All right. That drop occurs right as the Spoos drop into 1175. Okay. That was the last time we had a big drop in the premium. So we'd have to go lower than that typically in order to see another big drop occur. And we're doing that right now. The fair value is not correct on this chart. That's at 680. We didn't get any new lows in here. See where our low threshold is? The premium did not go that low. We didn't hit that new low that we were talking about. You see how on this 1 minute chart, which is very slow, the premium was beginning to creep back up into a divergence where it's just going above the 0 line on our indicator here. And now this is just beginning to turn, and hopefully she'll drop it again. And we really need to see this drop below the lower threshold. Because we're right at a support area. This price is support. Let me show you why. Okay, that's support. There was your low, but this is support. And it's got to drop below that. It's got to go below 09.5. Will it make it? Pattern says it should happen. Now, if you were going to take the posture that the pattern that has emerged today is a blue day, you'd be out. You would be out. Because the blue day pattern says we hit neither a new high in the afternoon nor a new low. So, being that this was a support line, you'd be out if you were playing the blue day pattern. Now, the real risk is that it isn't blue, but instead it's red, and that price is going to get breached. I don't know. I don't know what that pattern is today. It could be blue, it could be red. There's just nothing happening right now, especially on the premium, to support that conclusion that this is a red day, or what the premium is supporting is that this is a blue day, because we rallied off of that support line and we didn't get a new low on the premium to forecast that this was going to drop even further. We got instead higher lows. So on the basis of the premium, yeah, this was the blue day, and that's as low as she's going. So the short traders playing that pattern ought to be done for the day. But taking the real risk is to play the red day pattern, where you expect that level to be breached. Now let's look at this. Let's look at the Dow here on the same kind of chart. Where's the area of support? We'll have that up in a second. All right, now the Dow broke through It broke through. Low was at 605. Oh, wait a second here. That's the low for the day on the Dow. The Dow just hit the low for the day. Ooh, that changes things a bit. That changes things a bit. That gives us more confidence for a red day pattern emerging because the Dow broke below its area of support and hit a new low for the day. Ooh. Oh yeah. There's the whole day. Let's shorten that up a bit. I'm making this adjustment just to get a better picture. Yeah, that was the low of the morning, right there, at 6:11, and a new low for the day here. That gives you further reason to expect a new low on the Spoos for the day. Okay, let's watch the premium. Let's watch the premium instead. Premium is not confirming. Not yet. Nope. Premium is higher. Higher lows, not lower lows. Not good. But okay, here we go. We broke that low. We're breaking through. No big move down on the premium yet. We're going lower. So that 650 low for the day is now far more likely. And the Dow is even dropping further. The Dow just dropped below 16,600. Let's look at this on our composite chart. Okay. Now it just dropped below that. We went as low as 597. You see what we're up against here? Higher areas of volume. We've gone through the area of low volume here. Well, not yet. We have to go all the way down to 588 for that to happen. But then we have to climb back above this area of higher volume with the idea of going down as far as this area of low volume. Okay, because we went through this, area of low volume. Now we got to slowly climb past this area here. It's going to be a bit of a struggle. Right, 599. So yeah, it's going to be a bit of a struggle here, or at least it would seem so. And the Dow just got divergent. So it looks like we're going to move back up a little bit. All right, we're going to come back in a few minutes. See how we mentioned the Dow just got divergent. And hence we didn't drop any further at that particular moment. So this may move back up into the area of the 618. Way below the threshold, lower highs on the premium, and a little bit of divergence on the Dow right there. $618 is kind of the number that we're expecting to get more of a bounce down. That could be all she wrote. The ticky hit a 26 right here. And when we hit a 26 on the ticky frequently, the rally on the Dow is over when this hits a 26. I say frequently, but not always, because we just went higher. Okay, 618 is still that threshold, or an area of resistance, let's put it that way. And basically, we're right there. So I'm thinking this is over. Yeah, this is over. I don't think it's going to go up much higher, and down we will come. Okay, folks, here we go. 650, low of the day. Pattern says low of the day, last half hour. It's struggling. Here we go. And we just tagged the low. Okay. No new lows on the premium. So, yes, certainly buyers stepping in. We went one tick lower. Is it logical that there'd be some buyers there? Yeah, it's logical. People will do that. But does it technically make any sense? No. No. Let's see why. Remember where this is on the composite. Okay, 1906. That's right there. Now, we can say that because of the declining magenta colored line here, that's a calculated line, that we're going to get some support off of that price short. And we would need to drop really a bit further for us to expect that this is going to take a precipitous drop. For example, if it were to drop to around 1904 3/4, it might not go any further. I think we would have to really look at that level very closely if it drops right into that price, which in all likelihood it will yet today. Yeah, in all likelihood it will. We got a half an hour left yet to trade. And while the pattern was fulfilled by way of hitting a new low right within the last half hour, I think that did in fact occur. No, it's a little premature. We didn't quite hit the low at the half of the hour. But neither are neither is the day over. But what did happen, when we hit a new low for the day, we did not hit a new low on the Dow. So the Dow was divergent, hitting a higher low at the moment that we hit a lower low. So that was a further reason to expect a little buying going on there. So if you're short, new lows for the day are entirely possible in this last half hour. So we'll come back if we drop much lower. Okay, we just hit a new low on the Dow. All right, so here we go. Just hit a new low on the Dow. Didn't hit a new low on the Spoos, so we're going to have a little bit of a struggle here. No new low on the premium. So now the Spoos were divergent when the Dow hit the new low. So we're not in sync. We're not in sync. But now we are. All right. Now we're dropping into new lows on them both. There was a further divergence on the Dow as it moved into this new low. There was a further divergence. Let me show you this. So here's your struggle. The indicators are going higher, while the Spoos or the Dow is going lower. So there's that divergence, which is understandable that every time we were divergence, we moved back toward the calculated number here at 16,607. Okay, 16,607. And look at your indicators. Okay, these are, you've got some divergence here on the highs. And premium is dropping. Look at your indicators here. This is all turning negative. It's all negative here. Very possible that this little move here was a good place to short because you're in a short trend and you've got a contrarian going on here. Any new low in the last half hour is adequate for the pattern to have been filled. And so when you hit this low in here and the premium didn't go any lower, you could say, hey, this is a good time to get out and be done with the day. Now, I don't really see that as being the low, but in terms of pattern, you did hit a new low in the last half hour, and your premium didn't go any lower. Those are your conditions. So you could get out at that point and say, yeah, I'm done with this. But as we still have time left, we still may be getting lower lows. Personally, 475 will be my target. Once again, the reason I'm saying 475 is this is 475 on your composite. You're just past this area of higher volume on a cumulative profile from the 23rd of May. And just getting over this higher area of volume is frequently what we see take place. It comes down, it says, I don't want to go any further. But if it begins to drop much below that, yeah, then it could continue to slide. So that's why I'm saying 475 would be where I would expect to see this market go today and say, yeah, we're not going any lower. $86, 586 was the low on the Dow. That's right here. So similarly, a new low on the Dow might cause us to drop as low as 565, go through that around 557 before it says we don't want to go any further. There's time for that to occur. Now this is the composite from the latter part of May on the Dow. But what we really need to look at is this composite. Okay, we just hit 5. We're not at a new low yet on the Dow, not even close. And you don't see the premium going lower. So the premium failing to go lower as we hit new lows on the Spoos makes dropping much further than this at this particular moment very difficult. We're not hitting new lows on the Dow. We're not hitting new lows on the premium, and therefore, you know, we may have just hit as low as we're going to go. We went as low as 5. I said 475. Okay, there's the 475 I was talking about. Do we go lower? This is key. We just dropped a tick lower. If it goes much below 4, ooh, we're almost hitting new lows on the Dow at the same time. This is critical. Dow is not divergent. We hit 4, 375. This could begin to slide. Oh dear. But no new lows on the premium. Oh, no new lows on the premium. Here we go. Oh boy, here we go. she's going to continue to drop. Look at where we are on this composite profile. This is going to continue to drop. All right. 902, that little dip. 901 is that little dip. I'm talking about right here, right there. 901.5. The slide is happening. Oh boy. And you know if it goes beyond 1900, it ain't going to stop until it drops down to this area of low volume. Which oh boy. No new lows on the premium. I'm a little bit surprised. I'm a little bit surprised. That makes calling where this thing is going to turn rather difficult. But as you can see on the profile, you've got a basis for saying, yeah, we should be dropping to at least 1901.5. And it has divergence on the Dow showing up here. But the Dow hasn't dropped to that area of 557. It was at 566 at the low. So it should continue to drop. Okay, we're a tick away from that low area of volume. There we hit it. Expect buyers to jump into this at 1900, but watch the premium. Watch your indicators very carefully here. Now, let's blow this up and really take a close look. All right, I'm not going to pay any more attention to the Dow right now. 557 would be where we would expect the Dow to hesitate. No new lows. Lows of the premium are practically above fair value here. So that's indicative of support. However, 1900 is such a big number. All right, it's such a big number that it's going to be hard to break through there. But what will help us to see whether or not it will drop is where we are on the where the premium is at that time. So that on the composite profile, 1901.5 had an area of low volume. It's kind of filling up the chart there by dipping into that price area, going through it, back up, and back down. Now, believe it or not, at 1902.5, you've got a contrarian. You've got a contrarian. It's right there. It hit 100. New low. Going lower. We hit 1901. And we're going lower. $557 on the Dow was where we might expect the Dow to feel some support. We've gone as low as 562. Dow's at 559, so we're right about there. It's very risky to expect or to hold a long trade for much longer, only because we're almost at the close. But if she breaks below 1900, and it might hold, but if it breaks below that, and we're still divergent on the premium, and we haven't seen any big drops in the premium all afternoon here. Okay, we hit 554 on the Dow. It looks like this is going to hold. So holding a short trade much beyond this would be very risky. So the real question is, what's going to happen right at the bell. Are we going to continue to drop? Hard to say. Emotionally, we shouldn't drop. And there's nothing on the premium here to suggest that we will. But 1900 is a big number, and it stands to reason that that's going to hold at least for today. And we're just about at the bell. Down went as low as 554. We said 557. And 1900 being an area of emotional support just because it's such a big number. And no new drops in the premium either. So it stands to reason. And now we're hitting 1900, and there's the bell. So now the question, it broke. It broke. Bad news. Okay, anything you see on the premium at this point is well, this chart isn't moving anymore, so let's move quickly over to our fastest chart. $98. Wow. Bad news. It didn't hold. And on the composite, oh, bad. All right, let's go back to the composite because this is beginning to drop precipitously. Let's use this chart instead. Right in here. $98. We've gone as low as 97. Right in there. Okay. All right. So it went through that area of low volume and again started to head back up. So that may have been it. That may have been the low. Really, this, according to the chart, this looks like a more logical place. But at least we moved through that area of low volume and headed back up. And because of the time, you know, the last 15 minutes of the day, yeah, we probably hit the low there. But wow, what a day. Okay, this has been one of the longest videos that we've had in a long time, and we hope that it has been, that you picked up some pointers in the course of all of this. And hopefully the volume on this video was adequate as well. Oh, we're back down again. We broke through. This could continue down. And it is. Whoa, 96. $95 would be where I would expect this thing to find a bit more support because it's broken now to 95, 95.25, 95.50. There's 95 on this chart. Or pardon me, 94.50. Excuse me. And we've gone as far as 95. And we're developing some divergence at that price. So, all right. Well, we've been forecasting this all along. This is the last thing I'm going to say today. We've been forecasting this drop for weeks, just because of where the volume charts show the market needs to go. And you saw over the course of this week these huge drops in the Dow. You've seen another one today. And we have to say that it isn't over yet. So let's take a look as to why. Why do we say this isn't over? Let's go back to the profiles. Now let's look at the profile on the ES all the way back to January. Let me just clear this up for you. We're going to look at this profile. This takes us back all the way to December. This is the full year. Okay. Where did we go today? 1895. All right, right about there. We have to fill in this area of lower volume. That's 1883. And the point of control, as you can see, is 1849. That's going to be tested. So, is the drop, is this drop over with? Not at all. It's not at all over. We're just getting started. Now, you can see that what is happening right now is that the market's trying to climb back so that it can close above 1900. And then you're going to hear the pundits later on today make some stupid statement about 1900, when in fact we dropped below it and we breached it, and you saw it. So it's just trying to close above 1900. Now it closed above 1900 when the Dow closed. I think we were above that at that moment in time. Nope. Right at the bell. Right at the bell, we had dropped below 1900. And now it's just trying to make its way back up. But here's your chart. There's your future. We're not over yet by any stretch. And here's the Dow. Okay, so there's your point of control, 1849. And here's the Dow. thought. All right, here's the Dow from December of 2013. Point of control, 16,452. Where did we go today? Where did we go today? We dropped through this area of very low volume. Now look at this closely. See that little line there? Low volume. Over here, low volume. Over there, low volume. Market doesn't like that. Let's expand this chart up a little bit. Now watch this. Okay. 16,541. Where did we go today? 16,543. Are we going to hit 16,452? Oh yeah. We've got to. We've got to. And then it's just a question of whether or not that area on both the Dow as well as the Spoos, 1849, 16,452 on the Dow. Expect that next week. Expect it next week. Today's drop, all right? Another 35, 36 point drop on the Spoos. The Dow drops from 757 down to 543. Do the math. Okay? Do the math. I don't even know. I don't even want to know. But this has been quite a drop. All right. So we're fully expecting this to continue to drop next week and probably hit the point of control on both the Dow and the Spoos sometime next week. And then we'll see. We'll see if we get much of a rally off of that. So on that note, we'll close. We're hitting the new low for the day on the Spoos as we finish our video. She's come down and broken the low of the day, and it's continuing to drop. 893.75. It's continuing to drop. Wow. So we hope you have a nice weekend, and this has been a very significant day in the market, and a good day for you to be watching how we do this. You've had numerous opportunities to learn the methodology that we teach here at Risk. You need to have the right indicators, a good platform, and the ability to watch the premium very carefully and to learn the method that we teach on how to read it. Our course is well worth the money. You can't find this kind of information and knowledge anywhere. Anywhere in the world. Nobody teaches this. But you can learn it here for a price that's probably half of what you spend by going to any other source. So that having been said, we wish you a good weekend, and this is Rod Kusin and Spoonman for Risk.